Good afternoon, and you're watching Moneycontrol live. Welcome to Closing Bell. I'm Santosh Nair.
And I'm Yatin Mota.
Well, a big fall in the market today. Benchmark indices, Nifty and sensex falling by over 1%. But the brunt of the selling pressure today was borne mainly by small and mid-cap stocks. The NSE Midcap index falling by close to about 3%, while the small cap index fell by close to about 4%. Quite weak advance to declines ratio, more than 20 stocks down for every stock that was up. And at the same time, if you look at the sectoral performance, barring FMCG, which fell slightly less than some of the other sectors, the FMCG index was down about 1%, whereas if you look at some of the other sectors like metals, realty, PSU banks, they were down by about 3% each. IT shares took a beating. Auto was also under pressure. So clearly bloodbath on Dalal Street today. Yatin.
Absolutely, and Santo, as you mentioned in your opening comments, the advanced decline ratio is almost 1:20. In the first half, we were down less than 100 points on the Nifty, and by the end of the day, we are down nearly 260 points, decisively below that 19,500 mark. In fact, below the 19,300 mark, which is the 200-day moving average. So I think the market has seen a lot of panic, especially in the second half. First half, the volatility index, Santo, did not show any kind of panic, but people held on to the positions. But in the second half, as the selling aggravated, probably we could see some bit of selling pressure. Obviously, it's a truncated week. A lot of fund managers, a lot of funds are enjoying the holidays because tomorrow is Dussehra. It's a market holiday, so the Wednesday's opening as well as volumes will be important to watch out for. But as Santo was saying, all the sectoral indices in the red, and the mid cap, small cap indices down more than 3-4%.
Well, interesting point you made there, Yatin. But strangely, the Nifty Wix was down, in fact, yesterday.
Yes.
Ideally, when you have a lot of risk, or at least the perception of risk in the system goes up, you should have seen the Wix rising. But what you actually saw today was a decline in the Wix, and this is something that is confusing traders. Also, Yatin, what were the volumes like? What do they indicate at this point?
So, Santo, today the volumes were not that great. In fact, if you look at the, volume buzzers today, it was Credit Access, Grameen, Ipca Lab, all of these stocks which were probably news. And if you look at Nifty 50, the volumes were quite low. In fact, if you look at the most active traded securities, HDFC Bank turnover only 1700 crores, Kotak Bank turnover, despite the fact that there were two events, one results, two the new CEO, the volume was only 1200 crores, ICICI Bank, Reliance, sub 1000 crores kind of a market cap in the cash segment. I mean, not the market cap, but the cash volumes. But it was a day of dry volumes in the front lines, and mid caps also falling on a pretty low kind of volume scenario.
So this is not the kind of panic selling that you would usually see. So what you're trying to say is actually that there was not much of buying.
Yeah, lack of buying and probably aggressive selling is what.
Yeah, so even whenever the buying, there's not enough buying in the system, even small sales kind of tend to have a multiplier effect. Probably that is what you would have seen in today's market, the fall, much of it coming through on the back of low volumes. So Yatin, how is the earnings season looking like so far? What has been the market perception of that?
So I think, Santo, the IT stocks delivered numbers which were broadly in line with expectations. Obviously, the outlook is slightly bleak, and there is no real reason for analysts to upgrade the numbers as of now. If you look at Infosys and HCL Technologies, numbers was better than expectations. TCS announcing a big buyback. If you look at HDFC Bank's earnings were good, probably in line with expectations. ICICI Bank, fantabulous set of numbers. Obviously, they met the analyst expectations, but if you look at the matrix, the internals quite strong. The management commentary was good. Kotak Bank also, there was hope that the underperformance will end after RBI has appointed the external candidate who is ex, Barclays and ex Citigroup. That kind of pedigree of people coming in, still the stock was down 1%. So I think the earnings season was satisfactory. No big positive surprises, but I think bulk of these manufacturing companies, bulk of the PSU banks are yet to report numbers, and that will be something we'll watch out for.
Well, one of the guests on CNBC TV 18 today was making an interesting point. He said that while inflows have been fairly strong into both small and mid cap funds, at the same time redemption pressure also seems to be on the rise, because a lot of early birds now maybe want to take some money off the table, and probably you could see that intensify in the days to come if this decline were to persist. Well, and with that, let's quickly move on to the stocks that caught our attention today, starting with Kajaria Ceramics. Now, Jefferies has come out with a Jefferies, HSBC and Goldman Sachs have all reiterated their buy rating on the stock after the company's second quarter numbers. Now, the numbers were a bit of a miss, and that according to analysts was because of lower volume sales during the second quarter, and that also typically tends to happen because the monsoon is a time when there's some bit of sluggishness in the real estate activity as well. So that partly explains why there would have been a volume miss. But at the same time, the analysts are quite positive on Kajaria Ceramics for the second half of this year. The main argument here is that the company has added capacity. So with that capacity coming on stream, and also fuel costs have receded in recent times, and that trend is also likely to persist in the quarters ahead. So because of these two factors, you should see some kind of a recovery in the stock's earnings. Now, Kajaria Ceramics has been on a downtrend since August. It's fallen close to about 20% from the highs seen in August, but at this point the stock appears to be stabilizing a bit.
But Santo, what's not stabilizing is Laurus Lab, which is the stock on my focus radar. It was down nearly 10% in trade, and it has been consistently disappointing investors for the last 3 quarters when it comes to earnings. Now, Incred says you should reduce your positions in Laurus Labs. They have a target of 307. Obviously, there was a 30% sharp miss on operating profits as far as Laurus second quarter earnings are concerned. We have seen it across the case with API companies and pharma raw material companies that there has been a slowdown in volumes. Pricing power has been reduced significantly, and overall demand scenario has dampened. Now, if you look at Incred, they have cut the EPS estimates for FY25, which is next year, for Laurus by 8%, and the current financial year by a steep 25%. They believe that the earning recovery has largely been factored in, and the extent of recovery has been dismal so far. The management every quarter comes and talks about new products, recovery in the marketplace, but that really doesn't be the case or seem the case this quarter. Last quarter the stock managed to hold out on the management commentary, but today the stock saw a beating, and clearly the verdict of the market is that yes, they have been disappointed, and the stock fell nearly 10% in trade.
Well, yes, Yatin, if you look at the Incred note, what the analyst has mentioned there is that the management is confident for the coming quarters, but at the same time they have not given any clear-cut guidance. So that is what seems to be missing, and that's the reason for this bearish mood. And in a market like this, when the chips are down, wherever there's earnings disappointment, those stocks typically tend to get punished more, and probably that is what we saw in the case of Laurus Labs as well. The last stock on my watch list this afternoon is PTC India. Now, Yatin, anything to do with power has been a favorite with investors, irrespective of whatever the business model. So, PTC India, mainly a power a company whose business model is trading in power. Now, the stock is quoting at still less than 1-time book, so that is something that can be said in favor of PTC India, but it has had a very good run this year so far, rallying by close to about 60%, and this was one of the biggest losers in trade today, falling by almost 9%. Now, it does look probably that it could be unwinding of some speculative positions, given that the run up has been fairly sharp. But at the same time, Yatin, I was just looking at the volumes. The stock went up on very huge volumes on Friday, but today the volumes have been barely 1/5 of what they were on Friday. So the fall, as you've also been mentioning, is much of the declines are coming in not because too many people are selling, but largely because there is suddenly no buying support in this market, and also understandable considering that tomorrow is a trading holiday. Maybe a lot of players did not want to take on too much positions because of that.
Absolutely, and PTC and a whole host of these power companies have been witnessing some bit of profit taking. In fact, month to date, I was just looking at data. JSW Energy, Adani Power, stocks like IEX are down in double digits, 10 to 15% kind of losses. So no surprises for PTC correcting in trade today. What's also not doing well in the marketplace is Voltas, and Goldman Sachs has a sell call on Voltas with a target of 800. And if you look at Voltas, again they have been disappointing with their quarterly earnings. As far as risk reward is concerned, Goldman Sachs believes that it's unfavorable. Their project business has been seeing some one-off provisioning, some write-off, some margin pressure, and in the domestic market the air conditioning segment market share has again declined on a sequential basis. Obviously it was a monsoon quarter. Understandably the market share does not matter as much as it matters in a summer quarter, but yes, despite the pricing strategy, despite doing most of the things right, Voltas hasn't been able to take market share again back to its peak level of 26-27%. It's hovering around that 20-22% kind of a mark. So it will be important for Voltas to hold on to the market share, strategize a plan wherein they can also pass on some pricing power to the customers in terms of price hikes or probably lower discounts, and brokerages are clearly not really looking at the stock, which has been underperforming for the past several quarters. If you look at sector companies like Havells, probably like Polycab, or probably the new listing RR Cable, all of these stocks probably provide similar kind of growth prospects in that segment. Obviously they are not direct competitors of Voltas, but come at a similar valuation or a similar sector wherein a lot of hopes were there with the India story. So let's see how really the summer sales pan out for Voltas, but as of now it seems that the results have disappointed the street.
Well, Yatin, also in the case of Voltas, I think it becomes some kind of a technical play also, because around 750 rupee levels, you've seen that there is some kind of buying support that comes in, but closer to 900 level, I think once again the focus is on whether the company can deliver on margins and market share. So any disappointment there, again you see the stock slipping back into the same range.
I think Santosh, this 750, 950 kind of range is there in the stock for the last 1.5-2 years. So stock has not been doing anything. Given the fact that most of the Tata Group companies have performed better versus Voltas. So yes, a clear disappointment in the sector as well as within the Tata Group stocks.
Well, clearly, and within the AC segment, you have this constant comparison with Blue Star, which seems to be
Blue Star is there.
Yes, and I think Blue Star has been the better performer over the last few quarters. So a bit of an uphill climb for Voltas there right now, but things do change quite dramatically also. So we don't have the last word yet. Well, that's all that we have in this episode of Closing Bell. Thank you for watching.
बहुत बहुत धन्यवाद.